Good morning and welcome back to Almus Market Mornings. Overnight tensions spiked after President Trump urged an immediate evacuation of Tehran, with reports of fresh explosions around the city. Investors quickly shifted into the risk-off mode. In Asia, focus turns to Alberta's G7 summit, where Japan's Prime Minister Ishiba is pushing the US to scrap auto tariffs. Crucially, the timing is with today's Bank of Japan meeting. The BOJ is expected to leave rates unchanged, but any hint on how it will trim bond purchases will be closely watched before the Fed meets tomorrow. JK, what are we expecting out of the BOJ meeting today, and any particular updates from the G7 which is ongoing?
Good morning, Swaraj. Uh, yeah, I think wide expected that Bank of Japan will trim their long tenor bond purchases. In other words, it will be a QT, quantitative tightening by Bank of Japan after a long time, and this is intended towards reducing the market imbalances and the balance sheet of Japan, which has expanded hugely. So what we have to see is how much they trim and what impact it has on the yields. Even though they may not change the the interest rate, this itself may have some impact on the market through particularly in the bond market. And whether yen reacts stronger, it is something that we need to wait. On the G7, not much has come out as a communique, but then there are, indications that various countries have been talking to US officials on the tariff issue. Including Europe, there have been several unconfirmed reports. Europe is agreeable for 10% tariff, and then they have denied it. Japan is also pushing, for removing the tariff. So I think it's all a part of the negotiations. And in the meanwhile, of course, Trump has left the meeting early because of the tensions in the Gulf. So I think G7 is quite overshadowed by what's happening in the Gulf. We have had escalation over the weekend, and then of course after that a relative calm for some period of the day yesterday. And then after that, there was a news saying that Iran is reaching out to its Middle East partners or Middle East, neighbors to talk to Israel and US to get stop the attacks and get into some sort of a negotiation on the nuclear deal. But at the same time, conflicting is that China, US, even India is actually starting evacuation processes. And important thing is Israel has said that we are going to finish this. We are going to decapacitate the nuclear facility of Iran, and they themselves have said that Iranian people should evacuate themselves from Tehran. So it's something that I think we are yet to reach the climax in this, and market is waiting to see what happens. Iran has been quite a bit dented in their power in this attack, and the only thing that threat remains for the market from Iran is if they attack any of the oil facilities or the oil tankers, and that could be a huge disruption to the markets and the oil prices. So these developments are very closely looked forward to by the market. Yes, as I said, BOJ kicks off the central bank meetings today. Fed will be on tomorrow, and on Thursday we will have the Bank of England, and then even the Swiss National Bank, which is likely to take their rates to zero. So that's something we'll take it, but most of the expectations are well discounted. On the economic data, yesterday we had lot of data, particularly China. We had industrial production data, which was slightly lower than expected. The slowdown was well expected, of course, because the previous months benefited from front loading of exports to the US, particularly in view of the tariffs. At the same time, retail sales were better off. There's some improvement in the consumption, but still well below the earlier, before the slowdown occurred. So it is definitely an encouraging sign that the policies support has been filtering into the economy. Housing prices again fell. That's a sector that they need to really do a lot more to lift it. So overall, I think China has shown some patchy recovery, and barring an unexpected deterioration in the upcoming data, likely that China remains on track to achieve its growth target. Apart from China, we had a couple of data points from India as well. Indian wholesale price inflation is to 0.39% in May 2025, lower than the expected decline of 0.8%. And of course, this is the lowest reading since March 2024. We already had the CPI number, which came at 2.82% last week, and that was also a 6-year low. That's this disinflation in India is continuing and supports the action taken by RBI already to ease policies. Of course, most analysts, including me, I feel they are going to be on a pause. I think we might have reached a trough in the rates unless there is a challenge to growth or if the inflation falls even further. That's as far as the pricing pressures are concerned. But then importantly, we also had the trade data number from India. The trade numbers showed moderation in trade deficit from 8.65 billion. This is, I'm talking about merchandise plus services. Overall trade deficit narrowed down by about 2 billion from 8.65 billion. It also moderated from 9.35 billion, which was seen 1 year back. So both on month and year on year, trade balance has improved. There's been a fall in the imports. That was the main reason why we had an improvement. Of course, exports almost stagnated, marginal increase this month. I can say on a month-on-month basis, so not much there. But then overall, you can see that the India's trade deficit on a 2-month basis actually has been higher. That's mainly because of the gold imports that have happened. 2-month deficit is at 17.25 billion from 14.17 billion. Again, this is the goods part of it. Again, maybe in the coming month, it will come down even further because of oil price, because of the gold imports reducing. But then oil price may again add to these deficits. So going forward, the picture is not clear. But let us take a bird's eye view. Our deficit is now ruling in the range between 22 billion to 28 billion, which is quite manageable. And so not much of a concern as far as the trade numbers are concerned. In the US, of course, not much of a data yesterday except New York Fed's business activity index, which was lower. But important date today has been heading to other set of macro numbers like retail sales, industrial production. In retail sales, particularly expected to fall by 0.7% after showing 0.1% last month. And it's important because the consumption is the thing that we are watching as far as US is concerned, being an important part of their GDP component. On the markets, bond yields were still on a range and quite volatile, reacting to all the war news, and then of course good issues, good response to issuance of new bonds. Particularly in the war scenario, I think there has been some demand for safe haven bonds, so that's keeping the yield well contained. On the stock market, there was some relief rally after the indications from Iran that they want to get to talks, but then it is short-lived. So again, we need to see how things go on today. Currency market again rangy. All eyes on Bank of Japan whether they move again. We have been hearing now and then that U.S. administration wants Japan to allow the yen to strengthen. So whether this this today's decision leads to yen strength or not, that is something we need to wait and see. Otherwise, markets have been on hold, waiting for key data as well as FOMC decision tomorrow. On the rupee again, it was a very tight range, but slightly again, I would say well balanced because of the oil price and Gulf tensions. It was well bid on the lower side at 86 and all, but good offers also were seen at 86.20. Importantly, the stock market sentiment was not affected, rose 1%, although FI numbers were on the negative side. So again, the domestic institutions and the retail investors are quite happy to load up on the stocks on the dips. So rupee remains, I think, will not move out of this range for some time until the resolution or how things proceed on the war front. And we will also have the data from the US and the US FOMC decision that will probably give some indications of the future rate cuts, etc. Thank you.
Thank you, JK. And just quickly summarizing, geopolitics remains the center stage. All eyes are on what happens with respect to Iran and Israel. When it comes to economic data, we had the Chinese industrial production yesterday, which was slightly lower than expected, but retail sales was a little better off. In India, we had the wholesale price index come in at the lowest reading of 0.39%, which is a 14-monthly. So that is something significant on the inflation front. We had the trade deficit moderate, fall in imports resulted in this improvement. And of course, today we have the retail sales and industrial production data out of the US. Retail sales expectations are of a fall of 0.7%. So let's see what happens on that front. While overall markets remain rangy, all eyes on the BOJ today. And even for USD INR, it has been a tight range. Dollar demand has remained due to the Middle East tensions, while on the higher side, dollar selling is seen around 86.20. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.